All right, so today we're going to be taking a look at my dividend investing portfolio. As you can see here, nicely named Dividend Dentist. So currently, my value here on my portfolio is actually at $19,119. So it is doing fairly well. This is the first time we hit over 19,000, which is always very, very exciting when we hit new thresholds. And just to kind of go over some stuff, we have for the last day had a gain of over almost pretty much $100, which is really, really nice. Good day. Nothing too spectacular. The last week has been a little bit lackluster with the holidays and everything. Sometimes that happens. So right over here, we're only positive $12.73. If we go over to the month, we're actually up almost $700, which is really nice. You can see right over here, of course, we're dividend fans, so we've earned over $37.78. Now, that's earned dividends, which means some of it might not have already accumulated in the account just yet. Then we have for the last quarter almost $2,600, and you can see almost $95 in dividends. And then if we go over to the last year, we're sitting at over $3,365, which is fantastic. And then one more scoot over to the all-time tab, and we have $3,471. Now, if looking at that $19,000, you're like, whoa, I'm nowhere close to that. I always like to show people this when kind of going over this. Look at where I was pretty much 2 years ago as of this recording. I put in $100. That's all I did. I just started with $100, and then I was trying to figure out what I wanted to invest in, how I wanted it to go. And then once I started doing that, I started plugging in a little bit of money every single week. And once I started feeling more and more comfortable, I started throwing more money into it to where I am today, where I'm putting in about $800 a month, give or take, sometimes a little bit more. But that's all having to do with figuring out what kind of style I wanted to invest in, because I think the biggest thing for a lot of people when they get started is they don't know that this is what they want, right? So like when you look at all this right over here, these are all my slices, which I'm personally using M1 Finance. If you are interested in checking them out, check out the link in the show notes down below. Helps support out the channel, but it gets you started with using M1 Finance, which is what I use. But yeah, you can, you might take time to figure out these are the stocks that you want. So if you go in here, like I have Apple, Microsoft, and AT&T. Here on my growth pie, I have Tesla, Amazon, Google, and Facebook, and all these different things. But like I didn't figure this stuff out right away. This actually took me months upon months while going through this transition right over here of buying and selling a bunch of different companies. Like I was figuring out, hey, I didn't want UPS anymore, or this one other stock just didn't seem to work towards my goals, right? Because your goals might be kind of shifting until you figure out what kind of investor you want to be. Obviously, being a dividend investor, rightfully named on my portfolio, I knew kind of the end goal that I wanted to have, but I didn't know which stocks and which slices that I needed in my portfolio to get me to that goal until more recently. I would say probably since maybe October or August or September or so is when I kind of solidified my portfolio. So I was sitting around like less than $10,000 and I was still buying and selling different stocks. At one point I had a max of, I think, like 44 different companies in my portfolio, and now I'm sitting about 28, which even then is sometimes a little high for me because some of the stocks don't get any love with my deposits, but I'm still trying to figure out here and there every once in a while. But this has been pretty much the gold standard on my portfolio for roughly a couple handful of months, at least over a quarter for sure, as far as these companies. And I have a few more. I just got to move this screen down a little bit here. At the very bottom, got one more, Pfizer, there it is. So those are going to be all of my stocks and all the companies that I have. So let me actually scroll back up here so you guys can see. So that is going to be like pretty much the main core of what I have. Now, for anybody that is curious, because I showed you guys how much I've made, that was money-weighted returns. This right here is the unrealized gains. This is essentially not counting dividends or stocks that I sold and kept the money within the portfolio. That's sitting at $2,847. So it's about 17.5% gains on that money, which is pretty good. I know there's a lot of people out there that are focused on only growth, and that's great. But my goal here is to build a nice dividend portfolio somewhere, I want to say the first goal is $1,000 a month because it just sounds nice. And I think a lot of people go for it and it feels like it's more attainable, but I've talked about it before in the past. My goals are something closer to, I say a month. My goals are somewhere closer to, let me go ahead and do that, is maybe 10 plus thousand every single month, maybe even more. It'd be really cool if I can get to like $20,000 a month in dividends, and that is possible. And I can show you guys here in a little bit too, like how I break this down, how I get to like these kind of numbers, because I think that's important. I know a lot of people who maybe just hear about the word dividends and kind of throw it by the wayside. As an investor, dividend investing is long term. Like this is something you have to plan for a long time. So I'm going to show you guys how I get to that. But before I do that, I want to show you guys where I am with my dividends for the month, because so far what you see in my cash balance right over here is actually dividends I've earned over, I think, the first 3 weeks of the month. So I'm going to add those up for you guys here in just a second. But before I do that, just kind of a quick way to kind of help, keep the channel moving forward. If you have student loans, check out Earnest right over here to refinance those student loans. It takes about 2 minutes, as you can see right over here. And what that does is it gives you the opportunity to maybe lower your interest rates, which is of course very important when it comes to your percentages. And that can save you tons of money when it comes to maybe investing more or doing something else with that money. So if you actually check out the link down below, that does help support out the channel, but it also gives you a nice little bonus in the meantime when going through that process. So if you do that, let me know how much you save in each single month, and if you're going to decide to maybe invest more of that money after refinancing those loans, because I think it's cool. I've seen some other people actually save a decent amount of money that they turn around and put into their investing portfolios, extra deposit every month, all that stuff. So let's go ahead and show you exactly what I had earned so far for this month. So we're going to go into my activities feed, and then I'm going to go into my only here. And I'm going to scroll down here closer to the bottom first. Let's start at the beginning of the month. So right over here, you can see I have a couple different dividends that got paid out on the first. First one is Aflac for $4.45, which is great. We got Pfizer here at $2.28. We got Visa at a whopping 51 cents. So if you're somebody who's getting paid pennies or, under a dollar, don't feel bad. A lot of my first dividends that I was earning were honestly just cents. Like I think 2 to 3 cents was my very first dividend from Microsoft. So don't worry about that. You can see here, Discover paid me next on the 3rd. I don't know why it sent me 2, but in total that was $3.17. We got Johnson & Johnson over here on the 8th, paying me $2.42. Microsoft, speaking of, we got paid out $4.23. We got little Costco over here giving out a special dividend. So this was a nice little bonus, especially, towards the end of the year. It's kind of nice to get. $10.75. That is really, really cool. And then we can see over here, Next Era Energy. This is my first dividend from them. This is $2.94. We got monthly paying dividend right over here, which is Realty Income. I forgot it for a second, $2.79. And we got Home Depot. Again, for some reason, these ones paid out twice, but it still equals out to what I was expecting. So first one was $2.43. Second one was $1.03. So nice little combo. And then again with Lockheed Martin right over here. One of them came in at 22 cents and the other one at $2.63. So we're going to hop over here to my Google Sheet that I made. So I just got to kind of move some of my stuff around here. So let's jump out back a little bit. So this is my dividend tracker. I use this to actually just track how much I've earned in dividends. You can see here what my monthly average is. Right now in 2020 has been $14.90. I've earned a total of $187.34 deposited into my account. And then you can see how every single quarter we have just been moving up and up in here as well too. So what I'm going to do is actually zoom back in here, and I'm going to move the camera just a little bit so we can kind of get the right spot over here for us. Now, here's one big thing too. If you kind of like this spreadsheet right over here, if you think this looks cool as I'm scribbling over it, I do have this for free down in the show notes below for you guys, and I cut off the arrow, so let me redo that. I have it in the show notes down below for you guys, entirely for free. It's something I just put together. If you want to go ahead and download it, just click on that link and it'll take you through the process to get it downloaded, and then you can start plugging in your numbers to look like this. So I personally love it because you can see it right over here. So for December right over here, thus far I still have a little bit more to earn for the rest of the month, so I'm not done yet officially with December. But we're already sitting at $39.85. First and foremost, when we compare it to last year in 2019, blew it out of the water. Look at that, $2.77 we made in 2019, which was great. But we made a total of $39.85 so far for this month. And then what I like to do is also compare it to year or 2 quarters prior, because if I compare it to November or October, it's a little bit hard because different companies pay out typically on a quarterly basis. So if I just actually look at September, which is the last quarter of the last month of the last quarter, we got paid out $30. So without the last payout that we were expecting for the month, we're already up $9.85 from just September a couple of months ago, which is great. That's a huge increase from, end of the last month in the quarter for Q3 and then the last month of Q4. That's a huge jump. And you could see technically from June, which was the last month in the quarter two, it was an even bigger jump, which it would be nice to, double up like we did from June to September. But even then, going from $30 to $39.85 is a really healthy increase and something that I am, of course, happy about as well, too. So hopefully, March of 2021, which will be right over here, we're going to see a nice increase as well, too. So, and I'll show you kind of how this also works as well when it comes to compounding, because for a dividend investor, when you're looking, back in December of 2019, $2.77, you can't really do much with, but almost $40 thus far this month, that's a decent amount of money. I mean, you can go out to eat at a nice dinner, maybe just for yourself, but nonetheless, you can go out to a nice dinner with that money right there. Now, obviously, I'm choosing to reinvest this money, and I'll show you why that's so important early on when it comes to dividend investing, because it really is important. But before we do that, we can see here for Q4 in total, so October, November, December thus far, we're already at $82.10. The last quarter, we were at $63.21, so a healthy growth from the last quarter. And then if you look at what we did in Q4 in 2019, it was $5.77. So again, we blew that out of the water because we've been investing a lot more, but we've also had dividend increases. And that's a big thing too, because dividend increases are what helps us get to our goals. And I keep saying this, but we're going to show you exactly what that means now. So you see these numbers, you see how it's growing. This is going to be something where, in 2021, it's going to look really cool. 2022 is going to be even bigger, and 2023 is just going to compound all of this stuff. So we're going to head over to this next tab over here. I'm just going to, again, readjust this stuff here. So we're going to use a dividend reinvestment calculator. Now, this is just some information that I plugged in. Of course, this is just all based off of my hypotheticals. So you can go into trackyourdividends.com. I'll have a link for them below if you want to go with them. They have a free service and they do have a paid version as well too. Using my link does support me, but honestly, just checking out this calculator is pretty huge just by itself. So right over here, we plugged in my starting principal, which is around $19,000. That's what you guys saw in my main portfolio over here. Oops. Let me go back here and clean all this up. So you saw about 19,000 right over here. So if we plug that in, and let's say we're doing, I put 900, but let's say $800, like I said, that's kind of what our main focus is now. Actually, I'll put 900 because there's been a few times I've added more. My annual dividend yield right now is about 2.15%. Now, for a lot of dividend investors, this is kind of low. They're usually looking at like 4 or 5% dividend yields. I don't mind the lower dividend yield because we're going to focus also on dividend growth rate. And that right there is a big, big deal. And what that is when a company increases their dividend from the year prior because they are expecting to make more or, are obviously wanting to keep their investors. Obviously, making more in their business, they can pay out more, which is always a healthy thing. And then we're going to have, let me clean these up. We're going to have our annual share growth. We're going to put that at 9%. And then the number of years is just 20. So what we're going to do is kind of scroll down here, and I just got to make sure everything's on screen here. So you can see at the end of year one, it's expecting we're going to have 19,400. With it being the last week, that's not a surprise. So if we jump to year five, right over here, we're just going to do some nice jumps. So in year five, we're expected to make about $2,460 in dividends every single year. So obviously, if you split that up, that's going to be a healthy amount every single month that's coming in. The total amount that we're expected to have earned in dividends throughout all 5 years is $6,551, which is really nice. Obviously, a bulk of that is coming in that fifth year, and you'll see that as a trend as we go along here. And then you're going to see here $83,000 is what we're expected to have as a value in the portfolio. Obviously, we're still investing a lot of our own money, but we're starting to see a lot of growth happening overall. So let's go ahead and jump to year 10. because year 10 is when it gets really good. So right over here, we're expected to make about $10,248. So between year 10 and 11, if things stay pretty consistent, we're going to be making that $1,000 every single month. Remember, that's kind of like a big goal that a lot of people have. And it's a nice goal, but I want more. Like, I want more than that. That $1,000 is not going to be a lot in 10 years. So my expectation is in 15 to 20 years, I want to have more than that. But if we look here, almost $40,000 we're going to have earned in dividends in this first 10 years. Now, with $10,000, this is a huge chunk of that $40,000. Obviously, I'm rounding up. But you kind of see the picture here is every year you're earning those dividends. If you're having them reinvested, because that's a big deal, putting that money back into your portfolio, that is going to be a huge chunk of the dividends you've earned for that year, which helps you grow that money faster, because then this $10,000 is going to help get reinvested and then earn dividends on this money as well. And that's how compounding makes things so fantastic. And then you can see here that our estimated amount for the value of the portfolio is $230,000, which means that this money is really starting to compound itself, and it's earning more than what I'm putting in by myself, which is really cool. For a lot of people, when you're getting started like way up here, the first couple of years, you're obviously putting more in than what you're earning. So there's not a lot of gains. It almost feels like you're just trying to save money, right? Because if you put in $1,000 the first year, and let's say you've earned 10%, that would be $1,100, right? Doesn't feel like a lot of money, but 10% is a lot. So having an extra $100 for having $1,000 in there is not the biggest thing in the world. But like years and years down the road, as things compound, like it's going to get bigger and bigger amounts. Like obviously, if you have $100,000 in there, 100,000, and let's say you gained 10, I need one more zero, and then you gain 10% as well. Well, that's $10,000. All of a sudden, that's a huge chunk of money that is being earned from this money right over here. So as we move forward, obviously things will get even better as we grow it. So now we're going to jump to year 5, and this is where it gets really fun. So in year 5, in year 15, my apologies. So in year 15, we're going to see here $37,131 in dividends that we earned for that year. Now, of course, you can split that up throughout every single month. So let's kind of just do some fun numbers here. 131 divided by 12. We're looking at about $3,000 a month. Now, this is fairly conservative towards what I normally put in as far as numbers, to be honest, because my goal is in 15 years is to have like way more than this. I'm talking about like that $10,000, $20,000. But we're just being pretty conservative in this regard just for these examples. So you can see here in total, we've earned almost, $157,000 in dividends. A good chunk, again, of that coming in just in that last year. And then we're looking at over $500,000 in our value of the portfolio. So we're gaining value on the front end. We're earning dividends on the back end, and everything is moving forward. Obviously, these are just hypotheticals. We don't know where things are going to go, but just always kind of looking at stuff, right? So let's go to year 20. Do you see this huge jump right over here? So in year 20, you would be making per year $141,482 a year. So if you divide that by 12, that's 11,790. So about 12,000, right? Again, I'm hoping to hit this by year 15, but we'll see how that goes. You guys can follow along by hitting the subscribe button down below, and then see if I end up reaching that goal. So that would be really cool. So $141,000 a year, $12,000 a month. You could live so comfortably with that. Heck, you could probably even live fairly comfortable with $3,000, and then some extra money on the side. And you can see here that in total we make almost $600,000 in dividends in that lifetime, which a huge chunk again comes from that year that we actually earn those dividends. And the portfolio is worth almost $1.4 million. So you can see how the numbers start really jumping from year 15 to year 20 versus from like year 10 to year 15, right? Like those are nice jumps between these 2 years, right? $10,000 in dividends to 37, but I mean, going from 37,000 to 141,000 is just massive. Like if we go to this numbers piece here, so 25 years. Give me one sec, actually. Let me check something here. Sorry, I just want to keep that alive so it doesn't sign me out. Oops. I'm like jumping on all these pages. All right, so if we went to 25 years, look at this. This is nuts. So In year 20, we're earning 141,000. In year 25, if things stay consistent and growing the right way, we'd be earning $638,000 in dividends every year. Oh, that's a lot. How much is that every single month? 53,000. Do you know what you would be doing with $53,000 every single month? I have no clue what I would be doing with that. Probably some helpful things for the world. But $53,000 is what you would be making in dividends, obviously before taxes. So keep that in mind. You wouldn't get all of that. The government wants its money. And then right over here, over $2.5 million in just dividends. And your portfolio is worth $4.4 million, it looks like right on there. Now, there is a caveat to this, right? Because I share this with people and they're like, oh, that's going to be great, making, $600,000 in dividends. But the thing is, all the dividends you've earned prior to this, every single year, was getting reinvested back into your portfolio. So you weren't pulling this money out at any point. You were reinvesting it back into the portfolio. Oh, that arrow was backwards. But that's a big caveat, because if you were going in and let's say in year 20 with that 141,000, let's say you took half of that money out in dividends and then reinvested the rest back in, well, you wouldn't be at year 21 with 187,000. You'd be much lower than that, because all your $141,000 is not getting reinvested back into the portfolio, so it's not growing as quickly. So yes, you could pull money out in year 20, but 5 more years, if you just wait 5 more years, the amount of money you're making is just, it grows exponentially. So again, it grows even crazier from how year 15 to year 20 was amazing, but year 20 to year 25 just blows it out of the water as far as numbers, because the way that compounding works, the amount of shares you're owning in these companies, the growth these companies are having is just constantly moving forward. And I'll show you what I mean by this, because I have a bunch of companies. I'm here on seekingalpha.com. This is where I get a lot of my fun information for dividends. So we're going to go look at Home Depot just as an example. So Home Depot is a company I own in my portfolio. And if we go to their dividends over here, you're going to see this thing called the 5-year growth rate right over here. And so this is how much they grow on average over the last 5 years, 23%. That's huge. So if we go in here and we take a look, so just as one example, back in February of this last year, they went from $1.36 per dividend. So if you owned one share, you got $1.36, all the way to $1.50. So that's a 10% raise. That doesn't sound like a lot, right? Because going from $1.36 to $1.50, I mean, that's 14 cents. 14 cents is not a lot, but when you own hundreds of shares of Home Depot and then you get this 10% raise right over here, that's a 10% raise. You got a raise for doing nothing. And 14 cents times, hundreds of stocks, you're going to see a huge impact. So that way, when you're doing these calculations, 10%, let's say you're in year 20, right? And then that 10% happens and you've owned, 5,000 shares, 10,000 shares, that 14 cents, that difference in pay, right? That 14 cents is amplified. Like, let's just see here. 14 cents, and that's per quarter, or sorry, like this increase right here, that's per quarter. So let me go back here. So 14 cents, let's say you owned 5,000 shares. That's a lot of shares. That's $700 per quarter. So in a year, for having done nothing extra, you made an extra $2,800. That's somebody's monthly paycheck right there that you make in a year just from an increase in dividends that Home Depot decided to give you, an extra 14 cents on top of the original $1.36 that you were somewhat expecting to come in. And that's massive. That's huge, right? Like $2,800 is a lot of money. And I'll just show you guys here as an example, because when I talk about these things, I'm talking about in small increments, because 5,000 is a lot. Like, having 5,000 shares of this company is a lot. So I'm going to show you here. I'm getting started slowly. So with Home Depot, I only have 2.62 shares of this company. So I don't have a lot of it, but what I'm doing is I'm buying in small increments. One, because the price is really high per share, so I can't spend $270 every single week to buy one share at a time. I buy in small increments, but those small increments will start to add up. You can see in my all-time back in June of 2019, I started with $10 or 9.69, and then now, what is that? Just half a year later, a little over half a year later, I'm sitting at $712. Not a huge amount of gain on the dollar wise, which is $48, but I've already made $7 in dividends. Now because they raised their dividends, once they do it again, I'm just gonna make more money. And that's how it works. That's how compounding actually works, to be able to get to a point where you're sitting here earning these like massive numbers in dividends. But you have to be consistent, because one, you have to reinvest those dividends. You have to get dividends that are having good growth. You have to have companies that are going to be paying your dividends, because if you have a company, obviously Home Depot's been doing a really good job, but you can have companies that cut their dividends. I have Ross actually here in my portfolio, and Ross cut their dividend. So, I chose to keep them for other reasons, but they cut their dividend. So they don't have one anymore, but I own 3.6 shares. So I have to sometimes make those decisions. Like, do I want to keep this company, or do I want to give it up because they're not paying the dividend? They're not going to hit my goal. Maybe they'll come back. I don't know. So that's why I'm a little conservative with these numbers today. Sometimes I do plug in higher numbers for myself based off of my actual portfolio. My dividend growth rate is closer to 13%. And my annual growth rate, not including just, the craziness that happened just over this last year, but it's been closer to about like 11%. But I don't want to plug these numbers in. I do, obviously, because I like doing that. But showing you these numbers here, this is a little bit more of like a goodwill consideration of like, if this happens, I'm going to be super happy. But if the other numbers happen, I'll still be really happy as well too. So I could be looking at $500,000 in dividend income in 20 years if I really wanted to, or $86,000 a year in dividends in 15 years, which is kind of the goal. I kind of want to do this in 15 years, because in 15 years, I want to go traveling even more than I've already have in my life. But I want money to do that without having the worry of a job or, anything else. I have my dividends earning me maybe some rental income as well too, coming in on a regular basis, so I can do those really, really fun things to be able to, go anywhere, do anything. But it's being consistent, right? Like, it's doing my weekly upcoming trades. Like I kind of mentioned, I do my trades. So like right over here, I have like $50 going to Vanguard, $40 into Lockheed Martin, $20 into New Residential, 17 into Next Era Energy. We got $10 into Microsoft. Same thing with Apple, Amazon, and Tesla. We got $10 into those. These three companies here don't pay out dividends, but they have growth. So having a little bit of growth is also great in the portfolio, because I do also want the principal to go up too. But then we got solid companies. We got AbbVie here. We got Facebook with $8, Google with $8. Got to cut it off screen a little bit. We have Starbucks, ADP, and Procter & Gamble all getting about like $2 to $3 in these portfolio pieces. But these are small increments, right? Having a total of $200 invested this week with some dividend income is all getting reinvested into these companies. Lockheed Martin pays a really good dividend for me. So I'm really happy about that. New Residential pays a phenomenal dividend, but that is a lot riskier. So I'm like off screen there. But we have to like really consider based off of what works for our portfolios. These companies might not work for you. Maybe you don't like these companies. Maybe, New Residential is too risky for you because of their huge dividend cut that they had a couple months ago. Or, maybe you're just not a fan of Next Era Energy because of their philosophy, or whatever the case may be. So I always implore people that like when you watch other YouTubers like myself or anybody else, like make sure that you do that extended research on these companies. Like, go to seekingalpha.com. This is a great company or a great website that I love using just because you're going to get this cool information to look at the dividends, see their scorecards if you care about dividends, because you get to see their payout ratios. You get to see their growth rates. You get to see, how many years they've been growing their dividends. When they announce their dividends, knowing the ex-dividend date. This is huge too. Knowing this date is massively important, because if you're maybe somebody who wants to buy more shares into a company to earn the dividend, and you're going to miss that out by, let's say, one day, because let's say December 1st, you couldn't invest in it. Well, December 2nd means you're not going to get the dividend for this next quarter. Maybe that's okay. Maybe that's not what you want. So just really kind of consider those things when going through and seeing other people have these portfolio stock or these stocks in their portfolio, because your investing style is different than mine. So always make sure you're considering those when it comes to investing, because long term, I want you to succeed as well. I want you to get to, you know, $1,000 a month in dividends. Like, how cool would that be? That's a great goal. But then how much cooler would it be to get to $10,000 a month in dividends? I think that would be wicked, right? Just imagine the stuff you can do with $10,000 every single month in dividends. Like, you can do so much stuff. Like, you can do a lot. And the cool thing is, if that's all your income, dividend income is taxed differently than regular. So that's also really, really cool. And we can talk about that in a future video as well. Again, subscribe down below if you guys want to follow along on my journey, because I feel like me sharing with you guys, my portfolio, when I have good days, like $100 in gains, or when I have weeks, like, only $12 in gains for the last week, I want to share those with you. I also want to share with you when I have stocks in my portfolio that are down, right? Like, my health portfolio right now is down almost 1.34%, right? I'm down $12 on this account. I'm not embarrassed about it. I actually like to show this, because for me, when my portfolio is down, I like to actually start buying more into it. And that's called dollar cost average, which I think is important to know for anybody that wants to be investing in dividends for long term, because for me, I want to get the most value out of the things that I own. So as an example, actually, let me kind of fix this a little bit. So in my holdings right over here, this is one thing I love about M1 Finance. And again, if you guys are curious on checking them out, check out the link down below. It'll get you started and it supports the channel. But it lets me do fractional shares, but it also lets me kind of filter out all of my stocks by unrealized gains if I want to, which I do on a very regular basis. So right over here, you can see that Lockheed Martin for me, unrealized, is down 5%. $24 and some change. AT&T and DLR are also down, but I'll show you exactly what I do, because if you've stuck around this long, I think it's important for me to give you guys kind of some of like my best tips I have when it comes to trusting yourself when you've picked stocks and the stock market goes down, or even just those individual stocks, because when the whole stock market goes down, it's easy, right? Because everything is like down. But when one stock or two stocks or even three stocks are below their original purchase price, right? Because the cost of these are lower than where I originally bought them from, I actually double, sometimes even triple down on these purchases. So right over here, so Lockheed Martin, I'm down almost 5%. So I'm going to show you right over here. This is what I do. Let me reset this whole thing. Okay, perfect. So Lockheed Martin, I'm going to show you this. So obviously we got the dividends just now, but you saw earlier that I'm putting in an extra like $40 into Lockheed Martin. December 22nd, I put in $25. December 18th, I put in 11. The 16th, I put 8.23. The 11th, I put 21, 12. So these might not seem like a lot of money, but when you like scroll back further, I normally put like a couple of bucks here and there. And you could even see gaps in the dates as far as when money goes in, because it's not every single week that money goes into, that particular company. But I put in more because I'm like, hey, I'm buying this at $348, and last week I was buying it at $351. So I was paying more for it, the week prior. So they call that trying to catch a falling knife, because even though I bought, $11 worth on the 18th, the 22nd, I bought it for, obviously I put more in, and I bought it for even cheaper. So I got more for less, right? So you could see here, if I bought, 10 and 10, it'd be easier to see. But even though I put more money in, I got it for even less, because I'm like, okay, well, if it keeps going down, I'm going to keep buying more. And guess what? It went down again, so I'm buying more. And I did the same thing with another company. So DLR was actually down quite a bit more. DLR, right over here. So it was going down quite a bit more for a little while. So you can see right over here for a short time. You could even right now, but it was getting a good chunk of money coming into it, because it was down significantly for a short time. But I still believed in the company. The reasons it was going down weren't things that caused me to want to leave it. And you can just see $70. I put in $70 for $128, where, the week before that I was putting in 22 for 132, right? So 132 to 128. So it went down even more. And then from 128, the next week it went back up to 130. So even though it went back up, it was still below what I originally paid for it. So I kept putting more money in. And eventually, hopefully based off of the research and everything I've done, that the stock itself is going to come back up and it's going to be in the positive. Now, this is unrealized, so it's still down, $5.30. And then if I go into my main portfolio here, this is what I love about M1 Finance, because I still like to consider like my dividends that I've earned. I'm actually still up $2.75 from this stock because I've earned almost $8 in dividends. So even though market gains are down, dividends are up and we're still in the positive. And now that I've bought more into this company, which now I have 4.4 shares, I'm going to get nicer dividends, which is going to help it move forward faster. And if the stock goes back up, which I hope it does, obviously, then it's going to be even better, because let me go over here into Seeking Alpha so that you guys can see the actual summary over here. So you can see right over here, its peak was about $159.06. And then it dropped all the way down to that 128. Remember, you saw I purchased it at 128. So I bought it at that lull. So now it's starting to go back up. It's about $137 at this point. But imagine if it gets back to 157 and then some, and it keeps growing. I mean, over the last year, it's actually gone up almost 17.2%. In the last 5 years, it's been up almost 81%. So if things hold true and things move forward, not only did I get it at a really good price point for it to, shoot back up in value over time, but then I also bought a lot more in dividend stock, essentially. So I'm going to get paid out more dividends. And when it has dividend increases, like we talked about earlier, that's where it gets really good, because right over here, their 5-year growth average has been about 5.41%. So lower than, obviously Home Depot and stuff, but still really good. So if we go into this news history, this last one in February, I think it was right when the market kind of went down. So it's not as big, but 3.7% increase is better than inflation. So that's great. And then if we go to the year prior when they do it, because they normally do it once a year, so February of the year prior, almost 7% increase. So now that I own more of this company, when they do these really nice dividend increases, I'm going to reap those benefits because I got them at a cheaper price point. So for me, I almost see it as a sale when companies that I own are down from my original price point, and I save more money, I earn more dividends, and I get to my goals faster. I get to these goals, these numbers that I want to hit. Obviously this one says 86,000, but I want to get to that faster. And by doing what I'm doing, I feel like it's going to help me achieve this goal faster, because, as much as I want to put more into Apple, and I do put into Apple, and I do put in to like Microsoft and all these companies, I just put a little bit extra in the ones sometimes that are down more than the other ones in my portfolio that also have really healthy increases in their dividends. Lockheed Martin has a really solid one, and some of the other ones as well too. So for me, that's what my big goals are, and that's what I try to focus on, because starting off with $100 2 years ago and setting at 19,000, obviously a good chunk of that has been gains, right? And the focus is over time, that's going to be even more. I'm going to earn even more dividends over time, and that's going to just help me achieve my goals. And I want you to achieve those goals too. So what I want you to do is actually click on the video right over here, because I think if you keep on watching more with my channel, you're going to learn more and you're going to get excited about investing. And that's what I want you to do. Keep on investing and keep on learning. My name is Dennis, and I will see you guys in the next video.